All right, good morning. It is Friday, low volume day, typically. So we'll see what happens. We will see what happens. But good morning to you out there, everybody. Okay. Don't think I have a broadcast set up for today. Let's see. Today is the 21st. Okay, I do. All right, so pop that open. Turn on Twitter and post about it. Wow. What is going on here? What? Okay. What am I looking at here? It's down just a little bit more. Good morning, Marcus. So, as it turns out, of those stocks that were on the chopping block the other day, all stopping out, where is it there? 4 of them bounced back above the stop by the end of the day, and 4 of them stayed down. So far, with just that limited sampling of 8, that's about a 50-50 chance. We need to continue to get more samples on that. And that was Walmart, which is still way down. That was a good choice to get out. Upstart, has not bounced back. That was a good exit. Royal Caribbean had just like a insanely bad day yesterday, one of the worst, and no one really knows why. That was just so weird. I guess the news might come out about it now. Let's see. Shares fell following remarks from Commerce Secretary Harold Lutnick about possible tax impacts for cruise operators under the Trump administration's revenue program. Trump plans to tax foreign-flagged ships calling at U.S. ports. Okay. Let's see if there's any more about that. Royal Commission Executive sell shares. Wow. Share okay. Cruise stocks fall after Commerce Secretary. Any other reports on that? Cruise operator shares sink after Commerce Secretary's tax comments. Market opens in 2 minutes, by the way. But all right, I get the point. We don't have to go too much in detail. RCL, right, was a good sell. A-Lab held up, so I kept it. It cost me probably about $1,400 yesterday to run that experiment. Yeah, in basically normally I just stop out right at the stops or right around there. I'd say I took an additional $1,400 in loss by letting those run. But that's not exactly true because, again, I did get some gains back by holding the other 4 that did work out, but probably only like $400. So they made up for about a third of holding the others. So the ones that came back and bounced made up for about a third of the others that did not end nicely. That's interesting, okay? But, we still need to continue to get statistics going on that. Real world results and statistics. But the other thing I had said was that probably some of those ones that bounced back are going to go on to make up for subsidizing the other losses. Maybe 1 or 2 of them. But we shall see. So A-Lab was another one, and it's doing okay this morning. EAT was one that, it ended up being bad, and I did get out correctly. RBRK, I kept, and yep, it bounced back. And where is it this morning? Oh, RBRK looks like it's not doing good this morning, and also EAT. Looks like it's going to be one of the ones that ends up failing out. Okay, market's opening. We'll see how that plays out right now. NNE doing okay, bounced, and Bros. So those were the ones, and it also bounced. Now, so what I was saying is that I think half of what's left will typically stop out over the next within 1 to 3 or 4 days after that stop recovery, let's call it stop recovery. I think half of the ones that recover after stop recover from touching stop. Half of those will continue on to continue to and then officially stop out. I believe that. That's my guesstimate. Now, the other half of those will probably go on to perform for you. So that's a half. That's a very, 1/8. That's not the greatest useful result. And I'm not sure. I'm guesstimating that it subsidizes waiting until the end of the day to finalize your actions on stopping out of things, except for cases like RCL where things are panicking or having a historically bad moment, obviously. But my guesstimate was that by waiting till the end of the day, it's going to subsidize waiting till the end of the day. However, in real world results here, it's looking pretty close and maybe even negative. Here we go. Bros, for example, is now back to the stop, and it may fail out. So we'll see how that goes with those. It's definitely an important experiment. But costly, of course. Okay, the market is pulling back after opening up higher. That's putting pressure across the board. Looks like. And my worst position is RBRK. RBRK. Right. It is below the stop. It has opened below the stop after having bounce recovered yesterday by the close, but it is now open below the stop. And actually now it's bounced and it's back up above the stop again. Technically that's a red dog reclaim possibly. Some good signs, advanced signs that RBRK might hold the line here, but it's definitely in a weakened state. That's RBRK. All right, let's look at, we have about 45% breadth in growth though. So there might be some triggers going on. Let's go take a look. Grab. Let's see. My internet is very slow. Let me know if I'm cutting out or anything. Grab, let's see what you got here, Grab. Okay, it was earnings. Okay, let's see. We might have a trigger here for an entry. I got to get Wix on. Come on. The internet's being very slow. Let's go. Okay. Yes, it will be an entry if we can get up above 515 and sustain it. So that's Grab. But it needs to get above 515 and sustain it. It went above it. It's pulled back. We need some kind of a 4-point follow through over the 515 level in order to get it. Okay, presuming that will create an entry, then we'd put our stop down at 5. And it's possible that we'd have to wait for 530 for that 4-point uptrend to confirm over 515. So we're talking about 30 cents of risk to a $5 stop. So I'm talking about 1166 shares. Grab. By the way, RBRK is actually looking good, like I was mentioning. Now, Grab 1167 shares. And that'll be only if it can 4-point uptrend over 515, which would be yesterday's high, and which was an ER day. And that would be a meaningful entry and a pullback through earnings. Could be wishful thinking. But let's see here. That would set up 30 cents. That would set up average daily range is 30 cents. 5% from 530. 27 cents. Well, that would only set up a 4 to 1. Only set up a 4 to 1, and I actually think we need more than that here because it's not totally run away. 4 to 1 means we need a 21% chance or better of this thing not stopping out and the trade working out. And I think it's looking like it's going to. All right. As a matter of fact, yeah, right now it's failing. All right, I'm going to take a quick look at some of those other ones that I held yesterday. So EAT. Okay, A-Lab is doing fine from yesterday. The recovery, the stop recovery is continuing. That's great. NNE, the stop recovery is continuing. RBRK, the stop recovery is continuing. EAT is a little bit on the chopping block. See, I had 4 survivors yesterday, and EAT is pretty close to needing to be cut. Okay, so we checked on Grab. Let's see. Well, actually, let me see. I think the breadth might be diminishing here. Let's see. Across the entire stock market, we have 60% positive breadth, which is actually good, but I think that's mostly, I think it's very divided. I think it's coming from mostly value, which really isn't. Oh, it says NQ. So it would be from growth. That's not what I'm seeing, I must say. NVIDIA could be a signal. Let's see. Good morning, Michael. I didn't realize you were going on. Yeah, I mentioned it. because I missed you guys yesterday. Literally, I was just having such a focused conversation with my wife, who's long distance in the Army right now, that I apologize, but it just did not become in my world of focus during that call. She maybe has COVID, and she was almost fainted, and she was like, she was going through a lot of intense things. And the thing is, because it snowed that day, they closed down the medical center, so she was not able to have medicine. And so, it was kind of an intense, worrisome conversation for over an hour. And I think after that, I just went to sleep. I totally forgot. Like my focus just was like in a whole nother area. And, if that was some other man, I would absolutely understand. And I think that's, admirable of a husband, to have that much dedication and focus towards their family and their wife over all other things, I suppose. But I do apologize. It just didn't even enter my world of focus, and I really do not like, because I would have been fine. I would have totally went on if I had known. There was no one here to remind me. Kids were in bed, and my brain just didn't knock on my other brain and say, I only have one brain. So if one brain forgets, I got no fallback plan. I usually just remember, and probably should have an alert somewhere or something. Anyway, thanks for understanding. And we'll do a good class next week, on Thursday night. All right. Yeah, no, the breadth has really diminished now. It's only like 20% positive breadth. Okay. So that usually means we're going to have an all-day red day. Now, although NVIDIA, it has a little micro signal, a very interesting signal, but it is in a push already. It's not really a decent pullback, but it is possible. Even though I would not necessarily take anything right now because the market is acting red. It's like, this is a good example maybe. It's like loading up a ship and like a sailboat type ship, like in the old days or whatever, loading it up today with all the deliverables, with mail and things that you're going to deliver to this other, destination. But it's raining, and it's like extremely strong winds blowing in your face, and you guys are putting the mail and the shipping and the deliverables on the ship with the intention of going into the rain and the wind that day, when you probably should just wait till the next day or the following day and just see when the weather is better. Like, why be so eager? Like, just putting the stuff on the ship, even if the ship doesn't leave the harbor in a storm, the thing could capsize right there. Like, it's dangerous to be putting your capital in a direction on a day in which the forces are blowing against you. Does that make sense? So that's why we don't, even if there's something signaling, unless it's some blatant signal, it's just, or it can be backed up by a couple of backtracking days to come. You just don't need to do it. But frankly, you just don't need to do it. And look, NVIDIA has turned red, and we don't get in on red days. We get in on green days, and it needed to be staying above this pullback high. And so, yeah, there you go. That's all I'm saying. The wind is blowing in the other direction. Not good. Now, EAT is a little bit recovering. Let me see here. But see, it's way below my stop. So if it doesn't do the right thing for the rest of the day, by the end of the day, I might have to just chop it. I'm going to have to just cut it. So that's an example of one stop recovery that occurred by the end of the day where I could stay in, that probably is going to follow through and stop out actually anyway. it could probably take a week and a half, literally, of intense accounting on your trades that have gone on over the last month or a few months to go back and surgically dissect whether or not waiting until the end of the day is a profitable solution, or if you just should cut when you should cut. And every system is different because they provide different risk rewards. The stop points can be different in a certain strategy and stuff like that. So I have not done the stop statistical analysis on this, latest strategy we're running this year, 2025, with the swing scalping. So it will remain to be seen. My intuition and guesstimate was that it would work out to wait until the end of the day, the last hour, power hour, to make final decisions on stop outs. However, so far, at least maybe it's just because the market has had a strong pullback there in the last couple of days. But so far, it's looking more like, only in this small sample, that I believe, and I could even be wrong, the math might actually be fine, but I believe it may be a net negative to wait till the end of the day to stop out. So, but I really do want to know the definitive answer on that. However, I'm probably going to have to take a bite out of that analysis month by month, on a month by month analysis basis, because I've done 77 trades so far this year. Supposedly, that's what one of the trackers says. Feels like I've done more, but I guess 77 is a lot. And that's 77 charts that I'd have to go through and consider every little thing. And I'd have to look at where were my buys, where were my exits. It's doable, I guess. Maybe I'll try it this weekend. Maybe I'll try and see what kind of progress I can make. But sometimes those things can start as an easy task and then end as a giant project endeavor, So I don't fear that, I don't mind going through it and, finding out what the definitive answer is yet. But also understand this, we're only in the middle of February. So year to date, 77 trades year to date, and doing an analysis on that doesn't really cover the market running, having periods of running, having periods of stagnation, having periods of sell-off. I'm like, we won't really know until the end of the year. I mean, we need a year sample. So if I've done 77 trades in how many days? What's the date today? The 21st. Okay, Google, what day number of the year is it today? Well, fuck you. I'll ask ChatGPT. What day number of the year is it today? ChatGPT. Wow, it's actually taking a while. Maybe my internet disconnected. ChatGPT never takes this long. Come on, brother. Today is February 21st, which is the 52nd day of the year. I'm telling you guys. Oh, by the way, ChatGPT 4.0 is incredible. It is. It blows away Grok. It blows away Meta's thing. It blows away Google, Bard and Google. I think by about 2 or 3-fold. ChatGPT really is worth it. Get yourself the $20 premium subscription so you can turn on 4.0, which is the most intelligent, advanced reasoning one that you can imagine. And that's the one I was telling you about, where you can even push the little conversation button. It's like a mic button. It's like a little speech button or whatever. And then you can have just a conversation with it too, which is like really helpful. You could talk about just about anything. The level of reasoning, they say, is at the PhD level in all topics. Hey, Randy. Yeah. For almost constantly. Yeah. But I have to say, look, it is better now than it was 4 months ago by eons. I mean, it's like it went from a well-educated 17-year-old to an average PhD. Okay? I'm not going to say high IQ PhD, but PhD nonetheless. So it went from, a mature 17-year-old to an average PhD. Like, I don't know how many years of college that would really demand. I'm saying 6 to 8, maybe 10 years of college, university and beyond, 6 to 8 years. Oh, I could ask it, I suppose. But anyway, the difference has been staggering in about 4 months, maybe 3 months it took. And now, where it's at now, is it's incredibly useful. It can do just about anything now. It can be legally at the PhD level. If you need a legal document or something, you can ask it to craft that. And it ain't, a lawyer yet, but it's, it's getting close. But I just noticed there's now something called 4.0 plus basic tasks. I can't wait to experiment with that today after this, because I've been waiting so long for it to be able to do tasks. That means I could do something like every day at noon, go in and transcribe my latest YouTube video, and then create a summary and do. I could tell it some things. I think I got to take a look at what the basic tasks are and if they can be scheduled like that. But it's getting there, guys. I mean, it is getting there. One thing that I need it to do, I'm kind of waiting on this. I'm waiting to write my book about trading, because what I'd like to do is I need an AI like ChatGPT or whatever to take everything I have ever said for all the years, all my recordings, all the masterclasses, everything I have ever said, and collate those topics together by topic into, I don't know, it could be a different file for each topic, or it could be just a section of that topic. And that would at least show me what I've said top to bottom ever about that particular topic. And so then I can turn that into the chapter on that subject, and then I add the graphs and everything and the visuals and all that, and do my own reinterpretation and re-explanation. Or it's possible that it may even be able to summarize and re-articulate all the different times I've talked about all those different things, so that it encompasses everything I've ever said about a particular topic and puts it into, 10, 20 pages of my book. That would be very helpful, So that's a little bit, I'm literally kind of waiting to work on my book until it can be able to do that. And I think it probably kind of can, but with too much effort right now. Like, I have to add this and do a programming this thing and connect this connector on and do this, and it doesn't work, and then it downloads this and it uploads this and transcribes that and puts it all together and that, and then it's lost, and I'm like, why can't you put it all together? And yeah, it's not there quite yet, but it could be. Oh, so there goes eat. Yeah, I'm gonna flatten that out. Eat. Oh, I already did. I'm not in eat. Did I get out of eat? I thought I was still in eat. Oh, okay. I thought it was still in eat. Oh. Great. Well, eat was the stock I got rid of yesterday. Oh yeah, because it closed below the stop yesterday, and what we're seeing is it followed through. And it continued to stop out. It was the right choice yesterday. A-Lab was another one that we kept, and A-Lab is doing fine. It is back in my stop zone, and it's actually even green. The other one was Walmart, which I completely stopped out of, and it's got worse. See, it got worse. So that was a good decision too. Let's look at the other ones again real quick. Where are they? Where are they? Where's the list? Where's the list? There it is. Walmart. Upstart. I stopped out of that. And sure enough, it broke below yesterday's low. And so it is continuing to stop out, and that was a good decision to stop out. Royal Caribbean. Looks like it's getting worse today. Yep. So that was a good decision to get out of it. So far, Walmart, Upstart, RCL, and Eat. Those are the ones that I did stop out yesterday. They all actually are following through with being terrible, and that it was a good decision to get out of them. But I did wait till the end of the day on them, except for RCL, which had a very panicky type of day. Okay, now the 4 that I stayed in, we just checked A-Lab, and A-Lab turns out to be fine. It's recovering from the stop. It ended the day, recovered from the stop, so I kept it. And today in follow through, it's actually improving a little bit even. All right, so that's 1 out of 4 that I kept doing good. All right, next up is RBRK. RBRK, by the end of the day yesterday, recovered above my stop, so I kept it. And today it opened beneath it, but then it came back up above my stop again. So it is holding the recovery from the stop so far. Okay, it's probably not as good as A-Lab, but it is. That's 2 out of 4. The truth so far is that it is. So that's 2 out of 4 doing good, and that was kind of what I expected, 50% of them. I expect 50% of the ones that recovered to stop out over the course of the next 4 days. That's kind of what my guesstimate is. But so far, it's actually, well, let's see. Let's check NNE. Yeah, NNE is recovered just fine. It's hanging out up in the top of the recovery area after the bounce. So that's 3 out of the 4, having waited to the end of the day to stay in, that are following through with staying recovered. Okay, think of it that way. All right, Bros. Bros is a little bit in trouble. It has a little bit of a bounce, so we're going to be watching this. But Bros might end up stopping out. It might recover by the end of the day. Let's see. We'll follow that. And there's still about only 25% breadth, positive breadth on the growth market. So we're not really interested in getting into anything today. We're just sort of watching things. And the market is red. And I don't know, Randy, if you heard that part earlier where I talked about why put your shipments on the shipping vessel in a storm. Why not keep them dry docked and wait for the storm to subside? Why put the shipments onto the ship in the middle of a storm? Even though the ship is docked, why put the shipments at that extra risk of putting it on the waters, even though the boat is docked in the middle of a storm? And the point there is, during a red day on the market and the winds are blowing against you, why on earth deploy capital into a triggered signal? Just wait for the sun to come out. Yeah, maybe you missed that earlier, so I wanted to re-explain that. And so that's what we have today. So we're not eager. The market is the weather conditions. Always check the market every day for trading. I watch it all day, every day. You can see it's one of the things I watch continuously all day to know what's going on. Oh, rates just had a kind of a strong drop. That could be a positive. I don't know what's going on, but rates just had a little bit of a strong drop. That's good. That could bring in some strength into the growth. markets, but from what I'm seeing, it hasn't. And but even value stocks and growth together are dropping, which tells me that the dollar is probably dropping as well. Let's go find the dollar. Yeah, the dollar has dropped a little bit. The dollar has weakened a little bit, but the dollar's still stronger than all the other currencies on the world stage. But it has weakened. I told you I think it's going to be about 6 to 12 months, maybe even 15 months before we start to see the effects of the companies being able to report that they're experiencing good revenue and profits, and that's going to start to affect everything. And we're going to see rates coming down, and that's going to cause things to go up, and it's going to take some time, and the dollar will start to strengthen. And the tariff situation, the reports on like how is that affecting the national debt, and that's going to change inflation, that's going to change rates, and all this stuff is a positive. We have so many positive variables plugging into the global economy and the U.S. economy right now. The U.S. on the global stage and domestically. So, but that's going to take time to get the reports out, and it's going to be incremental, and so I think it's going to take, 6 months to 15 months before it's like blaringly obvious, but for now, I think, we're just take signals whenever it makes sense. We swing scalp. I don't really see anything position tradable at the moment, so we're not going to snowball anything. We're just going to swing scalp, which keeps you in for a minimum number of days and for maximum RR. That's the situation. What did you say? Find 2 stocks with an 8-to-1 risk reward this morning, and yeah, it's not quite there yet, but it could be, actually, believe it or not. You can train. Was it ChatGPT? I think it was ChatGPT was the one. Yeah, you can go into another side of ChatGPT and create these things. I forget what they're called, GPTs or something, which are like blocks of training. And I did that. I experimented with that like 8 months ago or quite a while ago. I experimented with training it on stock chart reading, and it got there. It was able to do it. But I wouldn't say that I didn't know how reliable it was, I think it doesn't have any insight greater than mine yet, but that will be interesting, the day that it can get past human analysis level. All right, let's take a look at, let's see if anything's not, I think almost everything I'm holding is recovering well from yesterday. I think Bros is doing okay. Well, it's hanging in there. It's right at my stop. Bros. NNE hanging in there. RBRK. Yep, recovering fine. A-Lab recovering fine. And then again, Walmart, good decision to cut. It's gone the other way. Upstart, good decision to cut. It's gone the other way. Royal Caribbean, good decision to cut. It's gone the other way. And Eat, good decision to cut. It's gone the other way. So isn't that interesting that the ones that bounced and recovered by the end of the day are the ones that stayed recovered, except for Bros right now. So for the most part, though, 75% of them stayed recovered. And the ones that didn't recover by the end of the day and were definitive closing below the stop, and so you can go ahead and close them, turned out the next day they followed through much worse. Things got worse, and that was good decisions. So out of the 8, you have to think of it this way, even though 4 bounced recovered yesterday and 4 stopped out, the next day now, looking back, it's turned out that 7 out of 8 of them was the correct decision. by the end of the day. That's interesting in and of itself. And we don't even know, the verdict's not out on Bros yet. Bros might have a nice recovery today. That would mean 8 out of 8 of them were the correct decisions by the end of the day. In other words, if it breaks your stop by the end of the day, it looks like it's between a 90% to 100% chance of being the correct decision to stop or hold it based on what it did, what it's doing. Okay, so that's even more interesting. Okay, but the thing is, what I want to know, and I have to get in there for the analysis, maybe this weekend, is if you stop out when it touches your stop, financially, what are the ramifications of go ahead and cutting all those? Because in that situation, guys, all 8 I would have cut, including the 4 that recovered. But did the 4 that didn't recover bleed me out much more than the difference between cutting them all at touch, cutting all 8, and what's that total? Negative? Because I can tell you right now that the other 4 that recovered quite a bit of the loss that they were generating, right? They bounced and they came back. I don't know, I'd have to really check, but I think it was like $400, $500, maybe $600, $700, $800. Oh, actually, I remember now, I think it was $900 of recovery. And I know that the stopped out ones, the ones that I immediately stopped out, that was Walmart, Upstart, and Royal Caribbean, and then I stopped out at the end of the day. But between all those, minus $1,400. So I had minus $1,400 between the ones that were doing so bad I had to cut them, and those all turned out to be good decisions. They touched and went further, so I got rid of them. I had minus $1,400. The other 4, which I experimented with running free, all of them, in some respects I did. By the end of the day, they had bounced and recovered $900 from where I would have cut them had I just went snip across the board. All of them. So my total loss would have been $2,200 if I cut them all across the board. But because I allowed them to get to the end of the day, my total loss was only minus $400 between them all. Because of the $900 bounce. Well, that's not true. My total loss was not minus $400 that day. It was worse because those stocks did bad. Like everything went down, and then the bounce. I'm just saying the bounce recovered $900 that you could say subsidized and paid for some of the other ones that were negative, right? But in total, by the end of the day yesterday, even with the bounces, the 4 that bounced and recovered, they were down too. It was down like another 1,000 or so. But that's not what I'm saying. Like, regardless of that, the bounce paid. It did actually pay for about, what is that, 900 out of 1,400? 65%, 2/3. So waiting to the end of the day pays for about 2/3 of the waiting to the end of the day. And what else do we derive out of that? Anybody have any other ways of saying that? But the difference between cutting them all instantaneously at their stops was 8 times 350. Well, that's not on the day, because I would assume they all start at 0. Some of them were already negative, some of them were positive and lost 500. Well, I could tell you. Oh, well, I could tell you. Yeah, I'd have to do it with a lot of analysis, but I think if I cut everything at its stop, when it stopped at the touch, that has I can't do that math because there's a lot of unknowns. Like how much did each of them drop from their stop point after touching? Between those, I mean, if you guys want to just stay with me for 20 minutes, I'll do the math. Let's just do it on those 8. It's a nice little sample. I guess we probably should just do it. Let's just do it. Let's just find out. Okay, I'm gonna have to write it in this book. I'm gonna have to do it by a little bit by hand because I just think going the spreadsheet route is gonna be too time consuming in itself. We just write this shit down. Okay, so we have RCL. We have Walmart. We have Upstart. Got RCL. A-Lab, and what we're going to do is we're going to figure these all to the stop. Eat, RBK, NNE, and Bros. Okay, now what we want to know is what was our position size in each of those. That's something that, see, I can't, that's why the guesstimate part was very hard for me in my mind. I need to know how many shares I had left. I had already taken profits on some of those. Okay, so now I got to go to my account statement. So the ones that I'm still holding, I can write down right away. NNE, I have 105 shares. 105. Bros, I have 106, I believe. Let's see. And is that any? I think I might have had 2. Yeah, 106. RBRK, I've got 50. And I still have A-Lab, and I've got 88. Okay, we're making progress here. Let's do this. So what I need to know is Walmart. How many shares of that did I have? You have to give it like 20 seconds. I know it's always, I pulled it up quite fast that time. So I closed 34 out yesterday on stop. Okay. Walmart 34, and it says I closed those out at 97.41. 97.41. So we'll check out the difference. Upstart, I closed 79 shares of those out at 79.25. RCL, I closed 73 shares of that out at 245.07. 73 at 245.07. It's a market order. It's just like you dump it. None of those did I take any profits that day, and none of the other ones either. Oh, Eat. That's the other one. Eat. And Eat, I sold 43 at 154.71. So I'm not talking about the long term. We're not trying to find the long term profitability or of any of these, because that would require me getting my reduced cost basis, average, profited, because I've taken multiple profits and stuff, right? That's different. We've done that. I got a very nice spreadsheet for that, right? I'm not talking about that. Let's just do what I want to know is what was more profitable, to take the instantaneous losses at their stops or let them run till the end of the day. You guys want to know about that? That's going to be the interesting thing. Okay, here we go. So let's start with Walmart. From Walmart, I needed to do a 5-minute opening sell because it was an earnings release. And that would have happened. The sell should have happened at 95.95 on Walmart. Oh, I actually got in lower than that. Oh, because it broke a pivot low pre-market. I mean, higher than that. Oh, that's by the minute. What chart is this? Never mind. Okay, so hold on a minute. Yesterday. Undo. Okay. Yesterday was started at this hour. Okay. Broke the low at 90. Okay, where was the open? Here's the open. 9:30, and then technically get out at 97.75. I got out at 97.40. Very close. So the correct point theoretical would be 97.75, I think I just said. So this should be the stop out point. Stop. Versus what I actually did. Okay, but we don't know that right now. UPST would have been right around the market open, and that would have been right at our stop of 83. Stop should have been 83. See, here's one. I let it continue, and it went to 79.25. So see, there's additional loss that we didn't have to endure. 73 shares of RCL yesterday. Stop would have been 253. Wow, and I got out at 245. So, but that RCL was devastating, but it doesn't matter that because this is what we're checking. We need a devastating one in the sample. Okay, we're still in A lab. We'll go back to those in a second, but EAT, these are the ones that that I did get rid of, but I got rid of at potentially worse prices. 158.40 looks like my stop is 158.40. This is EAT. Let's see if I did an alert on that. Let me see if I got the exact EAT. Stop 158. Okay, so stop was 158 on EAT, and I got out at 154-ish. Okay, so there's extra loss there, you see. Okay, so my question is, how much extra did I lose by holding to the end of the day versus just getting out at the stops, right? But we must remember that I held for that recovered. But we're going to go take a look. So the figures right now are Walmart, I did good. So the difference is between where my stop is and where I actually got out. That was excess loss, let's call it. Let's just call it excess loss. Excess, actually positive or negative, because the other ones may have turned out to be positive. Okay, so on Walmart, it was very little. I got out of that correctly. 97.75 minus where I got out, 97.41 is 34 cents, and I had 34 shares, coincidentally. $11.56. So I lost $11.56 in excess on Walmart. Okay, but that was probably my best exit. Okay, Upstart. Okay, Upstart. I was supposed to get out at 83, but I got out at 79.75. Are you guys following me? Do you understand what I'm doing? I think I do. I think I've been pretty clear. But I was supposed to get out at 83. So I held for an extra $3.25 per share of loss times 79 shares. $256. So that cost me $256 additional and 75 cents. Following along, everybody? Hey, looking forward to hearing the answer. Yeah. Okay, good. It's a very curious thing, right? Okay. An RCL, this is the big one, I should have got it at 253, but I got it at 245.07. This was a terrible move on RCL. And we didn't know what was going on either. 793 of extra loss times RCL, 73 shares, $578.89. By holding until, I finally realized it's time to get out versus just stopping out when you should have stopped out. So the excess loss there was 578.89. Okay, and then EAT. This is the other one. I was supposed to get out at 158, but I got out at 154.71, and I had that's $3.29 of excess loss per share, and I had 43 shares. So that's 141.47. 141.47. So these findings are going to be very interesting. But listen to this. So just between those four. Okay, but we're not going to count the ones that recovered yet, but we will. But just between those four, 141.47 plus 578.89 plus 256.75 plus 11.56, 988 between just those four minus 988.67 in excess loss. All right, now let's figure out what we're doing here on A-Lab. Okay, on A-Lab yesterday, I should have stopped out at 87.50. A-Lab, 87.50, but did not. Okay, how are we going to say this? Because like, what kind of loss did I take then? Trying to think about this. Stop. So we're figuring from the stop. Now, if I got out of A-Lab yesterday at the stop, technically that's 0. But because I didn't and waited, we actually made money. Okay, there's going to be a different figure probably here, which is the difference between yesterday's close, the prior day's close, and the stop also, but we'll figure that out in a minute. So what I am going to find out now is how much did it recover. So from the stop of 87.50, we closed at 88.40. 87.50, 87, close, 87.43. 87.50 minus 88.43 is 93 cents. Times the amount of shares I have for A-Lab, which is 88. So I recovered by waiting a positive $81.84 on that one. And then RBRK. Okay. I'm just trying to go. I got all this math going on in my head right now. I'm trying to figure out what answer we want to try to achieve here. But okay, the stop on that should have been, I believe, 71. Let me see. Did I get an RBRK alert out to you guys? No. But I do have it showing here as 71.20. And yeah, that seems to be the stop I want to go with. Okay. 71.20, but is where I should have stopped out. But I kept it to 72.22, 71.20. Okay, 72.22 minus 71.20 is $1.02. $2 times RBRK 50 shares would have been $51 of gain. $51 of gain. And then NNE. The stop was 30. It closed at 30.63, so 63 cents times NNE 105 shares, so that's plus $66. Plus $66 and 15 cents. And then Bros. Looks like we should sell Bros. Actually, I do need to sell Bros right now because that's 4-point downtrend on the 5-minute chart. Follow through beneath a low on a day that was a stop out day. Yeah, so Bros we just got out of. But regardless, yesterday's stop, the stop on Bros was supposed to be 82.40. Yeah, that wasn't an alert, so I'm just going to assume that's true. 82.40 was the stop. But by the end of the day, yeah, it closed like a little bit below actually, but I just decided to keep it 82.04. So actually that one, by the end of the day, I think before the end of the day, I just let it go because it was already up here. By the end of the day, it actually was a sell, and I didn't sell. But so we're going to say negative on that one. 82.04, 82.40, so that's 36 cents. 36. It's just close enough though, that I really think that you could have held that one. And that was negative $38.06. Okay, so what are we trying to say here? So first of all, by holding those beyond their stops, I endured a lot more loss than I needed. We could say that right away, because $988 plus that 38 on bros, we could kind of technically say. But like $1,000 in excess loss occurred that at this point, no, at yesterday's point was not subsidized much because we only got 80, 66, 50. We got like $150 of recovery from the stops, but we got $988 or about 1,000 actually. So we got $150 of recovery from stops, but we got $980 of excess loss from the stops as well. So exiting at your stops so far, that tells you so far that exiting at your stops is, at the moment they touch, is better than waiting till the end of the day. That's what that tells you. However, it is possible that A-Lab or RBRK or NNE, but it doesn't look like Bros we just got out of. It's possible that those follow through and recover so much so that, the 7-to-1 risk reward on something like that, or 8-to-1 on the ones that recovered, may pay for that whole problematic moment of waiting across the stop. But it looks like on first look that just stopping out at your stop is still the best idea, at least thinking of it that way. Now, the other thing I could do, trying to think about if that makes a difference. The only way holding and seeing how they close and holding until the close and making a decision during the close, which is like the final hour of the market, the only a reason that could be a good idea is that the ones that ended up being held over that supposedly recovered go on to fantastical gains, right? And we don't really know that yet. We don't have that data on those 8. But from what it looks like, I don't think they are going to, but they could, I suppose. But A-Lab is not looking great. RBRK on this second day. RBRK, although it's green and has bounced, it's actually lower right now than it was at the close yesterday. Now it might take off from here. We don't really have the data yet, and then NNE, it doesn't look great, but it's actually above yesterday's close. It opened higher, and it's pulled back. So even though it's red and it looks like it's worse today, it's not. It's above. It's right around yesterday's close. So it's kind of a neither here nor there. But Bros did indeed follow through and just, one of the ones that held over stopped out. However, I should have cut that yesterday. So it would have actually only been 3 out of 8 that by the end of the day were correct recovery holdovers. The other ones would have stopped out, and Bros, would have caused another $38 of loss, bringing that $988.83 or whatever that was to like $1,010 of excess loss by experimenting with holding until the end of the day. So I don't know how much you guys are convinced. I'm not still totally convinced, but I'm pretty convinced that it's, even in this strategy, swing scalping, one that we were building, a better idea to just go ahead and cut at the stop than to try and give it a chance. That's my conclusion on a limited sampling of 8 tickers. My guesstimate before that, and maybe we were just in a much better environment for whatever years my mind thinks of that as, but my guesstimate was that they recover well, the ones that recover, and provide enough subsidy to pay for holding on days where it's touching stops. But here, I think here's the really nice sort of healthy psychological way of thinking about it now, what we just found out. And then you say, I agree, you will always have the outliers that follow through or recover, as well as some that seriously break down. Yeah. But I think here's the really psychological good way of thinking about it is you lose less by stopping out where you're supposed to stop out across the board. Even if something does recover and goes on to bigger gains, so far from our sample anyway, it looks like it would be better to just not play that game and take your money and your capital off the ship instead of keeping it on the ship on those days, right? So time to take your stuff back, protect it, and let the ship go out to sea and not risk it any further. I can say this, then that's probably the healthiest way to think about it, but I can say this, that it will depend on the market, because I'm fairly certain that in a good market and on good days, if that's happening, here's what we could do. Here's how we could do it. If the market is red, then cut at the stops. If the market is green, give them a chance. That's probably the difference. Yeah, that is probably the difference, because in my mind, I'm fairly certain, my mind has sorted this out correctly, that on good market days, your good stocks will recover and make up for what's going on the bad stocks as far as everything that has touched their stops. Okay, so that's going to be the rule. I'm going to write that down. We've had some additional rules we've made up here. Rule on market green, at stops, hold until EOD. End of day. Or decision. Market red. Cut on touch. Everybody got that? Write that down. Rewind that, whatever you got to do. That's what we've just figured out. All right, you guys. That's the morning program. Hopefully you got that and can write it down and adhere to those rules. That is the morning program. The market, let's take a look at it. Wow, the market is continuing to be red. We're getting no relief. The VIX is not going too crazy. And what did you say there? Definitely not. Yeah. Bitcoin dropping. Let's see what Bitcoin looks like. The dollar is going up and rates are coming down. This is very mixed, very interestingly mixed situation. The dollar, as far as I see here, yeah, the dollar is strengthening. Rates are coming down, which means capital is getting cheaper, which is good for growth. But the market is responding actually negatively. And when there's this decorrelation, what I found is that that's because one or the other is front running. So the dollar is getting strong, so the sell-off is front running something. The market sell-off is across the board front running, but in rates, they're dropping, which means U.S. Treasuries are being bought up. In other words, investing in the United States government is becoming stronger, and the dollar is going up. That's why rates are going down. It could just be a matter of domestic foreign and the tariffs and all this stuff. It could just be a matter of global growth stocks, companies, are going to have some suffering, but that anything that can tap in domestically more is probably safer. But I think, almost at this point, almost all markets are global. All business is global. But I guess maybe that would mean that insurance companies that are only U.S., for example, would be one way to test this out, would be green today, for example. Does anybody know of, okay, let's ask ChatGPT. Let's test this out. What are some popular and listed on the stock market insurance companies which only do business in the domestic United States? Probably none. Why wouldn't you go global? Erie. Aflac? Interesting. Yeah, we'll take a look at Aflac and Progressive, PGR, and Allstate. All right, we have 3 examples. So possibly, if what I'm thinking is true, those should all be green today. That means I've figured shit out. If they're not, if they're red, then, hey, you know what? The market can be confusing sometimes. It is what it is. All right, let's go take a look at Allstate. All right, it's doji. It's holding. Progressive. Green. Okay, good. This is giving me an idea that I am correct. Aflac. Red. Son of a bitch. We got one red, we got one green, and we got one doji. What do I do with that? Well, there you go, folks. Happy Friday. Happy confusing Friday to you. There's a lot of factors out there, and, no one can really, put it all together. They try to, there are probably some that have been around for 50 years and have a ton of experience and know everything. But in my 26 years of experience, sometimes I don't know what's going on because the market is a multi-factored thing. And that's what's kind of going on out there right now. You got the tariff situation. I think Trump is talking about removing taxes We've got Doge finding, money, paying down debt. We have rates dropping. We have gold staying the same. We have the VIX going up. We've got growth markets and value markets going down. We have crypto going down. We have more investment in the United States treasuries and confidence in the US domestically. And possibly the confidence is also global, but because of the strength of the dollar and tariffing, it could be that making money as a global company is going to be more stressful on foreign markets, foreign monies for those companies, as far as importing, exporting, and all that. So it's a lot of factors. It's a lot to keep track of. It's a lot to figure out. And some of them are leading, and some of them are lagging, and some of them are correlating. Some of them are not correlating, and they might be leading, and they might be lagging. And I would always take with a grain of salt anybody that goes on CNBC and says anything. It's just like there's an opposite viewpoint for every viewpoint, and you just got to listen to what they're saying and like how much are they taking into factor, because I mean, if like for instance Elizabeth Warren were to get on CNBC and say that she thinks paying off the national debt is a bad idea and we should be printing money, are you supposed to think that's true just because she's on CNBC? So you never know what perspective this person is coming from. But I can tell you this, that communism, socialism, welfare economies, and all those likes are not economic, and they all implode. It's historically and mathematically. So they are wrong, but you just got to realize that. So when you're listening to these people like on CNBC or anywhere, I think maybe I lost the internet. Okay, I'm still here. You have to take it with a grain of salt what their actual kind of viewpoint is. Are they fighting for the handout society, or are they fighting for an economically sane and healthy society? You never know, with some of these people. But you can go like you can look it up and stuff. Because like you go over to their Twitter accounts, you can read some of their posts, and you go like, like Bill Ackman, and all these different kind of like activist investors and stuff, which have made billions and stuff. You never know. Are they left-leaning, right-leaning? Typically the right-leaning, economically speaking, are the economically healthy ones. They're using economic principles, and then left-leaning is more welfare, socialist, communist type of economic outlooks. And so those don't compute. Obviously, all of those civilizations have runaway debt and inflation. So you can figure it out and you can parse it out. Just be careful, to remember to figure out that what somebody is saying, what perspective are they coming from? It's always very hard. Okay, you guys. And with that, be careful what you hear. Have a good one. Have a great weekend, everybody. I'll be back in the group. I'll be here all day. Okay. Have a good one, y'all.